Hi, welcome to another episode of Business Benefits Television. I'm Jim Edholm. I'm your host. I'm glad to have you join us. And today, as you can see, is the second episode. We did the first episode a couple of weeks back. If you haven't seen it, check it on our website. And today we're going to talk about HRAs, health reimbursement arrangements. Health reimbursement arrangements are a way in which savvy companies can reduce employee benefit costs in a kind of effective way. So let me tell you how they work and see if maybe this idea makes sense to you. Let me erase this. I'm going to hope I don't knock down my little display here. I actually pulled that off. I'm very proud of myself. Okay, there are four parties to the health insurance arrangement. There's you, the employer. There's your employee, right? There's the insurance company. And they provide a product that's used to pay doctors. Now, they don't pay everything to the doctor. Some parts of it are paid by the employee. So we're going to put this EE in here. So the employee gives money, typically directly to the doctor or the hospital, but we'll show it coming into this thing here. The insurance company pays the doctors, and of course you pay a premium to the insurance company. Well, what if we simply went to the insurance company and said, hey, tell you what, let's modify the contract so that the employee is paying a greater portion of the cost. So now the employee is going to pay, the party was paying, and then a little bit more. Well, obviously, that's going to lower the premium because the insurance company has shifted part of the risk to your employee. So they're going to charge you a lower premium, and you're going to save this amount of money. All right? Now, of course, in the meantime, your employee is having to pay the extra amount over here. So the employee has picked up an increase, and we know you don't want to leave your employee dangling in the breeze. So what you're going to say to the employee is, look, don't worry about it. We'll pick up that increased cost. So you'll use the savings from the premium, which are guaranteed. It's going to happen no matter what, to reimburse any extra costs that the employees pick up. Now, the fact is that if you go from a $1,000 deductible to a $2,000 deductible, not everybody is going to use that whole extra $1,000. So what's going to happen is you can calculate what your liability is by taking the change in what the employee has to pay and subtract it from what the employee pays now. That's how much your risk is. And generally speaking, we've found that somewhere between a half and a third is how much you're actually going to pay. And we have scores of companies, scores of our client companies who use this technique, and it's almost never even reaches a half. Typically it's 30 to 40%. So the fact is that you're going to end up saving money on premium, and you're going to spend some money on claims reimbursement, but probably a lot less than what you save. How will you know how much it'll be? That's what BBI is for. We work with you to determine how best to structure your plan, what things to modify, what your risk is, and what the chances of your having to make those reimbursements. Now, the only problem that comes up with this is somebody's got to handle this reimbursement cost in here. Can't be you. Federal law says under HIPAA that you can't know anything about your employees' claims. So what most brokers do is they say, not a problem, we'll have you get a TPA, a third-party administrator. And that's great. The third-party administrator will take care of making all the claims payments. But the problem is that's an extra cost. That's not how we like to do it at BBI. We figure where possible, we're going to be the ones to be your partner to insert ourselves into that process. So what we do with our plan designs is we administer that extra cost at no cost to you. So we administer the things, and you end up getting all the savings, no extra administrative costs, and you're ahead of the game. If you'd like to find out more details about it, just look over here, and you're going to see there's a thing you can click on. Give us your name and address. We'll send you our 6-page report that includes 3 techniques. HRAs are one of them, but there are 2 other techniques that you can use to help reduce your employee benefit costs. Next episode, episode 3, we're going to talk about one of those other techniques, the health savings account. Very powerful technique, very easy to use, and I think you'll like it. I'll see you then. Thanks. Bye.